Vincenzo's Go Crypto Investing this August the 18th, 2025, noontime blockchain technology, gold and silver bullion, cryptocurrency update. And you can see gold's even today, silver's even. The mining stocks are having a little bit of a sell-off today. B2 Gold, after almost getting to $4, down 1.5%. Kinross got to about 1950 something last week. Now it's down to 1924. First Majestic down 2.5%. Fortuna down 2%. Pan America Silver down 1.25%. Rivian is up. Usually when all the mining stocks are down, Rivian for whatever reason is usually up. They kind of trade the opposite. When mining stocks start going up, Rivian usually goes down. Just something that I've noticed. Barrick Gold is sitting at $24. Hecla is $7.72. The mining stocks are slightly down today. The cryptocurrencies, the Bitcoin was down 2.5%, almost 3% earlier. You can see it started to rise today off of its low. But the bigger rise off of its low today, not even really. It's up, 3% from its low. It was down almost 5% today. You can see Ethereum is getting close to that underneath tapping of the major underneath neckline support or megaphone support now. And it does seem like we were talking about over the weekend, that's the most logical choice. And then if it holds that and tags it, it could have a reaction like it did here, where it almost hit the 4,051, got rejected, tapped the major support level that used to be resistance, and then you flew up. That's what you might be doing here with the Ethereum price. But what we're looking at in this video is the altcoin update. We haven't talked about the altcoins in a minute. You can see AMP is still consolidating sideways. It's trying to get that move up. You do know I'm very bullish on AMP. I have over 1 million coins. I'm not telling you to buy it. I'm just telling you what I have. I'm about 9.8% down on the position with 1 million coins. And I think over into 2026, I've been telling you year of the AMP is in 2026. I fully believe that. You can see this big consolidation we've had. And if we go look at this consolidation, one way to try to get a look at where a potential breakout could be from our bottom to the current price, 202. We'll bring that to the breakout. 202. And to me, this is something I've started to create and look at for an extended consolidation, whether it's after a massive pump, maybe potentially to go down, or after a massive tank job like this where AMP was down 99%. And then we consolidated off the low. From the point of the low through the consolidation, those bars give you, I believe, an accumulated potential breakout energy, right? Where it could go to, and you can see that gets you all the way up to here, which is a 23x move from the current price. So I think there's a max potential in 2023 from this low where we're at now of a 23x move is possible, because I think next year we could be sitting somewhere, look at that, somewhere up here. I think we're going to go between the 2.5 cents, which is a 6x move from the current price, all the way up to here, up to a penny, or what would that be, a 10 cents, which would be a 28x return. So that's something that I'm watching out for, and I'm going to be very interested to see how this plays out as we work our way into next year. But that's a new way that I've come across on seeing the potential energy of the buildup. And here's another one right here. You can see from where we actually hit our low to the current buildup, that's 205 too. Now swing up 205, that gets you all the way up there. And that is from current price a 13x move. And I have about 140,000 DGB coins. But you can see right now, after the last big pump, we've been consolidating down on what could be our cup and handle here, where you can see we form the cup, rounding bottom forms the bottom of the cup, neckline on the double top, and then the handle, which we're in now. And that could be something that we're in, not saying that we are, but a breakout in 2026 is, I believe, AMP and DGB are going to be the biggest outperformers and overperformers in 2026. And I think you could have as great as a 13x return from the current price in DGB. Obviously, you have a lot of work to do. This is in the weekly time frame. If we went into the daily time frame, you can see we're just outside delete of that major the handle resist support. We're on top of that, and we're just above the 0.00836, the horizontal left to right. We're above the moving averages, where if the price can hold and start to move up a little bit more, you're going to have, for the first time in a long time, the first time since back here in May, a bullish cross where the 50 is attempting to get on top of the 100-day moving average. And if you can stay on top of this critical support level, you can make a move to the next level, and that would be taking out that regional high at 0.010 and coming up to a swing regional high of 0.01239. If we look at the algo, we had a big pump back in to major upper resistance, or inside this trading box, which is the support and resistance, and the red trading box. And you can see we're sitting just above the 100-day moving average. We had a bullish cross where the 50 got above the 100. Now the short-term moving average is on top. The long-term moving average is on the bottom. That signifies a prolonged pump that's sustained up to the upside recently, and that's what's happened. And now we're holding just above the 23 cents, and we tapped the 50-day moving average at 24 1/3 cent. We need to stay above this 23 cents, because if we fail to hold that, your next move would be down here to 20 cents, and then we would be very bearish in the short term. As long as we're above this 23 cents, we're bullish. But right now it's starting to put that step down pattern. That could be the next move down is like this. That's your major support zone regionally, locally. In the short term is if you fail this 23 cents, you come to 20. If you can stay out on top of the 23 cents, you have a potential to come up and run up at the 35 cents. The XCN's the same thing, but this one is taking a nosedive to the downside. We've had a massive bearish cross, massive sell pressure, massive bearish overtaking of the market here locally. And you can see, like we talked about the last time, we got rejected by the 0.015 at the top part of this purple trading zone. We told you would dive down to a regional low of 0.01222, but we were going to break that because we wouldn't be able to hold it. And your next move that would act like a magnet very quick is all the way down here at 0.0083. That's now your current target. We could have a bounce back from here back up, but this is your current underneath target now, because the moving averages are very bearish and the price action is very bearish, and we're in a very bearish area in the price action with the volume and the sell pressure that's there. So very bearish short-term XCN. XDC is starting to sell back a lot of the gains that it made here over the last 6 weeks, and right now we're currently sitting right on the 50-day moving average. And we told you during this whole double top rejection up there, as long as you're above the 50 and the 200, you can still be bullish. But if you slip the 200, you would come very quickly down to a regional low, and then your underneath target would be down there at the 0.04 in orange, the top part of that orange trading zone. So in the short term in XDC, you want to hold the 200-day moving average at all costs, or you get extremely bearish. If you can bounce off the 50, you can make another run at this 10 cents over top. H bars in the same pattern, same formation. We're sitting just above the 50. We know if we stay above the 200, we can make a run at the 34 cents. But if we slip the 200, we're going to come quickly down to the 15 cents, and that would bring the 0.089 cents at the 8 cent level into some major target. But if you slip the 200 day, you're coming straight to the 15. If you can hold the 50, you can try to work up to the 34. That's a big spread, but that's where you're at in the short term if you're a trader trying to make your trade for a short-term trade. LCX got rejected again, several days off of that 14 cents. It was not able, like we were showing in green, to bounce on top of and break that major area. It got rejected by it. You can see the 200-day moving average is just below the 14.5 cents. Right now, we're sitting right on the 50-day moving average. If you slip the 50-day moving average in LCX, you're coming all the way back down to 9 cents. You got to hold the 50-day to try to make another run at the 14 cents. Like the channel, subscribe. Peace and love. Become members of Jabroni Killers, cheap as $3.99 a month to help keep these videos coming and support the channel. Peace and love. The Rex Eyebrow Asset Millionaires, Jay.